Hello, thanks for tuning in. This is a weekend review for the week ending September 16th, 2022. Quadruple witching is behind us, and man, it was a volatile one. As soon as the day ended, they pulled price all the way back up to 3,900. All right, so let's take a look at what's going on. So price here found some support at the middle of this descending channel, but you have an outside weekly reversal. You've got ADX rising, PPO setting a new low. You don't have the divergent low. From where I sit, there's only a few options here. We've got the ABC up pattern, followed by the ABC down pattern. This is called the 335. It's one of the best patterns. You see it all the time, and it's either happening in the upward direction or it's happening in the downward direction. All right, both of these are valid. And as you come into this next week, right, the 3,900 level or this recent low, and it's funny, is price actually closed above this after hours. So price was way down here and closed all the way up here after hours. So yeah, not exactly the type of close you want to see if you're a bull, but again, crazy things happen on quadruple witching. So what I want to point out is you did have the 510 bull cross, and it was instantly met with a 510 bear cross, just like back here. And this is a trap. That's generally what that means. In either direction, right? What you want to see is something like this. Sustained rally. Sustained rally. Here, trap. Okay? So this is where we are. We just got the trap set. Someone's going to get trapped. The bulls or the bears. We don't know yet. Again, this outside reversal candle from September 5th was met with an outside reversal candle from the 12th. And we'll zoom in here, put after hours on. We'll take all these indicators off, and we'll take a look at where I believe price has the highest probability of finding demand to start the week. This is either a zigzag or an impulse move, and we tell just based on how far low you go. So right now, the 618 has been satisfied. So technically this ABC can complete. We went below the low of the A leg. Structurally though, and just symmetrically, you'd want to see something like this. So I think that 370 level's in play. This is a perfectly symmetrical ABC right into the 1.0 extension at 370. It also holds the higher low, and it cocks the gun, so to say. This is how you get the biggest moves. You have to get an ABC up, and you have to get an ABC down. And this is what coils everyone in. Like every bull and bear gets so frustrated. But you have to remember, these patterns become more probable the further time goes on. And the further price remains above this low, the 362, and below the 431, you're in this range, and the probability of an ABC up continues. Now, this outside candle from the 13th is definitely one that you kind of got to pay attention to. I mean, you don't get a lot of candles like that. And so, the flip side of this, as I've talked about, and we'll know here later in the week, is that was just wave one. This is wave two, and we're heading down. And something like that. And then again, we got to say, well, is it something like this? Right, where each wave gets bigger, or is it something like this? All right, ABC completed. Wave one, we're in wave two, and we're about to cock the gun and go higher. It's impossible to tell. And I know everyone wants to say, I know, I know, I know. Look, no one knows. It is impossible to tell. There are too many probable patterns while in the middle of this range. Okay? So all we can do is look for the double bottom setup now, or look for this low to get recaptured. That's it. There isn't anything else to do. Now we'll take a look at some of the other leading indices, and I just want to point out that you're getting kind of the same picture everywhere. Outside bearish reversal on the weekly at the 200. Now, the difference is IWM breaking out of this descending channel that SPY could not break out of, that Qs cannot break out of, right? Maybe. And if not, is it doing something like this? All right, and here we are, something, 1, 2, 3, 4, 5. I don't know. Who the hell knows? That would all be overlapping, could be a big leading diagonal. We have no idea. And it could be something as simple as, right? There's your ABC. And we're working on our 1, 2 right now. Okay? Again, we don't know. And what does that do? It sets up this inverse head and shoulders. Again, validates above the neckline. But these counts are very, 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 very subjective. So what we want to try to do is focus on what's the trend. Are we getting whipsawed? And the answer is yes, there isn't a trend. The ADX is telling you on the weekly time frame there's no trend. The moving averages are firing whipsaw buy-sell signals. So again, all I can point out is that small caps look better than the large caps. They're both at the 200, stuck between the 40 and the 200, and someone's going to win. Someone will be, it will become very clear who is in charge, right? And from a bull, I'm not interested in the Qs until basically just call it 200. 200. And when you really zoom out on all of these, you see the same picture. You had a big .com crash, and then October of 2002, right, after a 2-year bear market, you have the start of something new. And again, what do you have here? That ABC up, ABC down, and then you get the 5-wave move. Now the question is this pattern done? And again, we use the fibs, we use all this stuff. Now we could come all the way up here. Let's just make it simple. And yeah, this looks done. I mean, there's no way this is still going, right? This guy's played out. This ABC's played out. We've hit the 4. We're moving on. And let's look at how much of this retraced. Yeah, I mean, have we ever got a 50% retrace? No. Right? That 216 level again. Boom, 50%. And it's the same on all of these charts. I wish I could tell you something different, but I can't. There was a bear market in the 2000 era. It happened. .com crash. That's where we are. We're at the .com crash phase. We've been above a rising 40. The bull posture here of all these moving averages. And I've even confirmed this on charts going back to the early 1980s. All right, big bull move. Pull back into the 40, and they slice through it like it's not even there. Okay, the 40 is my long term, and we don't trend indicator. We don't want to get below it. Right, and you've basically been above it since 2010. You have 12 years, coming in on 13 years of being above this line. Even during the COVID plunge, they closed below it just to recapture it the next month. We just came into it and rallied, and now got rejected at the 20. Right, you don't want to be below the 20. The 20s is also one of my favorites. So you get below the 20 here, it opens up this further downside. And we're at the bottom of the Bollinger Band already, just like you were here. Right? And it's the same on all of these. All right. So if you're a trend follower, if you're just trying to follow trend, like this is still an uptrend. This is still the Qs are still in a monthly uptrend. But what I will point out is this momentum is accelerating to the downside at a rate that you have not seen since the 2000 crash. That is just an objective fact. This histogram is very, very, very negative 12 at the peak. We haven't gone anywhere near that peak yet. Okay? Nowhere near it. Sorry, not negative 12. I'm sorry. What is this? Neg 46 versus neg 982. All right. So that's just looking at the rate of change or the separation between the 12 and the 26. You can also see it with the separation between the orange and the yellow lines. And that's really about it. I mean, these monthly charts are done. Every single one of them is done. This is at the point of done. We've already had the close below the 40 and the bottom of the band on IWM. If they don't bounce back from here, it's over. It's dead. This isn't recovering. And what do you really have? Like, you have to be objective. You have a rally from $95 straight to $250, give or take. You now have a 50% retrace of that move, which means anything can happen. They've satisfied the retrace that was required. Came back into this former area. This former area of supply and demand or resistance. Right? What was resistance is now demand or supply. Right? Is this just the higher low on the monthly? Again, if you're going to change this trend of lower highs and lower lows on the monthly, we need to set a higher low on the monthly. So that is the scenario. That's the bull case across every chart that we're looking at. This is just the monthly higher low. And OPEX is just an excuse to unwind these heavy positions that were put on. And that's why you saw the volume you saw. And you zoom in and you say, well, wait a minute. This is still above and closing still above the trend line. This finally hit the trend line on September 16th. Okay? So, like, I'm looking for a rally on IWM out of this zone. And more importantly, when we pull up SMH, who's kind of been the laggard this whole time, she's still above this breakout, holding this breakout, coming back down into this gap, will fill this gap at 198 and put in a double bottom or left shoulder head, right shoulder setup. Has put in the 50% retrace, is still technically, this could be something like this, like we've talked about in all these charts. But realistically, it's a double bottom. That's where we're at. Okay? And this has been the laggard all year. It's been a super performer going back, a decade. And in the last basically year has been a laggard. And look, this is an uptrend. I hate to break it to you guys. This is an uptrend. This is an ascending channel. This is not a downtrend. It's just not in an uptrend on the time frame that you're interested in. So, if this 40 fails, 156 is on the table. But from where I sit, right, you have to come and play the double bottom setup. You don't. When this moving average was lost, the setup became this line, this gap, or the double bottom. That's it, right? When you give up the goat here, you have to look lower. And until you did that, you had to talk higher prices. I mean, maybe you had the 510 and the 1020 cross right here on this day. So the 24th is when you could have started looking at the bear thesis. But the idea is you want to let the data unfold in real time and have an objective view of it and keep an open mind and let your perspective change. Don't be glued to one narrative. And when I look at SMH, I say, yeah, this has been underperforming all year. This is still in a downtrend. This is a problem, right? Problem. But why can't this be the monthly higher low? Right? Why couldn't this be the monthly higher low? It definitely could. And if they rally down here into 189, it's certainly a buy. And we're still just in the middle of this channel. We're at the bottom of the bands. Now, again, they get below 189, we're going to 150s in a hurry. That's just how this works. But I want to point out some setups that I see. I've been watching this setup for a very long time. Very, very long time. Okay, and this is a gap on the monthly. That gap's getting filled, in my opinion. And maybe I'm wrong. But this month is not closed yet. All right? It's not. And that's a gap that's left open at 150. And price closed the week at 131. So that represents a nice little opportunity. 150 is also the fib of this entire move. But more importantly, the weekly 200. The first time it's been tagged, really since it was captured, or since it was last tested during the 2018, 2019, 2020 recession. This was the last recession on the books. So, yeah, I mean, this is kind of the top priority for me. We've got the positive divergence, the lower high in ADX. No one wants to touch this stock. And when you look at the daily, closed at high on day. And if you look at after hours, got above the previous day's close. Put in an outside reversal. Yep, 132. So broke the low, got back in. All right, so, you know, a lot of negative sentiment on semis in a downtrend, in a descending channel at support, approaching support. This is a top ad for me this week. I added last week below 130. I'm looking to add more. We're going to continue the story. Here's another one, okay? CROX continues to hold the 40. This thing is so coiled. Inverted head and shoulders, left shoulder, head, right shoulder, neckline at 84. I mean, if they get above this 84, this thing's going to run. It's not going to stop. Same is true, really. You break 73 bucks, going all the way back down to 66, and then it's a buy again. Could come all the way back down and test this neckline. We'll have to see. But technically has satisfied this little ABC. Right? And it's all about how you want to, how you want to view this. Is this the 1-2 of the neck? It doesn't really matter. Again, very subjective. This is range-bound price action. That's all you need to know. This is in a range. That is it. The range is 66 to 83. There is no trend. ADX is telling you that. But what I'm trying to give you here is the setup. And the setup is price is trying to capture this 40 and this 10, 20, 5, 200, right? All of this is telling me we're getting demand. This is the start of a new bull trend. This histogram's confirming ADX is rising with price. That's what you want to see. And the last part of repairing this chart is getting above that $84 level and confirming the inverse head and shoulders bottoming pattern. If you look at the monthly, we're right at the monthly 40 in an uptrend on a stock that is coming directly off of all-time highs. And more specifically, an 8-bar pullback of 77%. So, we just want to keep things simple here. KISS method, I love it. Give me 115, and then you can sell again, right? And then that's either this, right? Or we're doing something like this. And no one wants to talk about that possible scenario because, even uttering the words all-time high right now is very bad, right? People get scared when you say that. And CROX is the leader in IWM. Go look at the top components in IWM. You'll see CROX in there. CRISPR is a leader within ARC. Why is CRISPR still above the weekly 20? Why is this PPO above 0? Why do we have the same bottoming pattern here? Right? Now, she's not outside of this descending channel yet. You do have an outside bearish reversal, some struggle here at the 40, but this is a brand new bull market look to me. You've got what looks like impulsive, could be corrective, looks like a 50% ABC, and then recapture of all the moving averages, and PPO starts marching higher. Now ADX is not confirming, so that is the red flag here. Right, and still could just be in something like this, descending channel, no doubt about it. I definitely see it. Just pointing out that doesn't make a lot of sense if, you know, CRISPR closed the week above last week's high, and IWM and SMH and Qs and SPY all closed below last week's lows. Why is the leader in ARC closing above last week's high? Why is ARC just closing inside? Now look, ARC could be putting in one of these. Definitely could be doing this right now. But this is range bound. This is range bound. This is not impulsive yet. This is range bound. Okay? And this is your downtrend, and she's on the outside. That's what happens. You break the downtrend, then you go sideways. That's how this works. Same is true on the upside, right? What you had to do here. You break the uptrend, then you do what? Then you go sideways. Same thing is happening here. Okay? You have established range. We're just inside the range. And until you get below 35 or above 55, you're dead stuck in the middle of what's likely an accumulation / distribution pattern. I believe it's accumulation. But the only reason we're even talking about this is you've got IWM that, you know, at the lows of last week's. Well, why is it that CRISPR isn't? Why is it that ARC isn't? Right? We're not at last week's lows. You look at something like CGC, she is. You know, you look around the board at like Zoom, they are. So these names here are within the ARC ETF are still failing. But they're also showing a clear 5-wave structure lower. And I know the bears don't want to talk about this. But there it is. There's your 5-wave move lower. And from 5-wave moves, you get massive moves higher or lower. So again, big retracements. They are coming across every name. Yeah. And I think it's going to be led by ARC and all the small caps. So let's take a look at TLT. Still can't buy TLT. Putting in another positive divergence. Yes. You know, 1, 2, 3, 4, 5. Maybe this is what's happening here. One more low and it's time to buy bonds. If not, she's probably breaking 100. Okay, and this is the chart to end on. All right. I'm not even going to cover anything else. It's not relevant. We have a few options here, and I've called this one out for a few weeks now. Okay. You've got the lower high option / double top, which is where we are right now. We've got exactly a double top at 348, which was the gap that was left open from the June high. You've got the look above and fail, where we come up, set 34935, then fall all the way back down to 25. Or you've got the look above and go, where we actually get above 348, which targets almost 5. All right, but don't forget where this has come from. We've already done it. This is it. So now she could come all the way up. Absolutely. Absolutely, that's in the cards. Why not? But it hasn't happened yet. Right now, what I'm seeing is the 5 is right here. Which is just about the projection in price of wave 1. So, and this aligns, right? The wave 3 high, wave 3 high, wave 4, wave 5. And the implications are very, 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 very high. Everything is positively correlated or negatively correlated to this chart. So what I will talk about is TNX is at a double top, right? TLT is at a new low. Well, it's threatening a new low. Okay. Commodities should be at highs, right? Why not? See, this is the red flag. Why aren't commodities at all-time highs? If rates are right back to where they were at June, right? June pricing for rates, right? Why is DBC in a distribution pattern down 20%, breaking this long-term uptrend? I mean, this is the biggest red flag that the bears have to figure out. I mean, they just have to figure this out. This is breaking down, and this momentum has not curled up at all. Now, I will say ADX is not confirming this. We're basically at a trough. We're at a low, and we've stayed at a low for some time. And when this happens, that's generally continuation, right? Like you saw here. Come into the low, boom, right back up. Come into the low, boom, right back up. All right, we come into the low, boom, break down. And then you come back up somewhere into this ADX level. It's like you did back here. So this is called a non-confirmation. Some people like to call them divergences, right? We have TLT at low. That makes sense. We don't have DBC at highs. And if TNX, right? If this is the reason, if rates are the reason ARK is lower, rates and earnings, right? That's the fundamental reason. Well, then why aren't we past the June lows? Why was the June low actually a higher low? Why is the leader in ARK nowhere near the June lows? So this is 100% the only thing that matters right now. This is it. You have to understand the intermarket correlations and the math that drives the markets. And it's that same math that can break the markets. And right now that math is telling us, right, the same correlations to treasuries have been driving the bond markets, driving the equity markets for decades. Right? It's not going to change now. When it does, you got to take note. But right now, it hasn't. This is exactly what you would expect, right? But like with bonds, okay, your TNX all-time highs are close enough, right? TLT all-time lows, close enough. That makes sense. But this doesn't make sense. If this is my June low, why are we not at a new June low on any of these names? Right? And if these names were so benefited by the raise in rates, why aren't they above the highs right now? Exxon, a great example. Why not? Why is this in distribution? This is a distribution pattern. It's gone sideways, right? I mean, it's basically, sideways for a year. Mild gains, stuck in the range, right? Whatever this, appreciation, 37%, give back half. Now you've just been stuck in this range. There hasn't been any appreciation on this, just like you had back here for a year. And what was happening back here? It's the same thing that was happening from here on. It's a correction in rates, right? And so this high makes sense. The June high on Exxon and XLE and APA, this June high, this makes sense. Look, it's right here. So TNX is now getting a new high, and this is the chart that is driving the price action over here. And wait a minute, APA can't get back in the ascending channel. Can't get above the June high. So this is This is about all I have to focus on this month, this quarter, right? Is this the start of something new? I mean, PPO is about to cross bull. Is it breaking? Is TNX about to break out? I mean, we don't know. It might. It definitely might. Is it going to 5 right now? Shit, it could go to 7 by the end of by the start of 2023. We could be at 7. It's not an exaggeration. This is definitely something that could happen. All right. And if that happens, then Exxon and APA, they should all be flying higher as well. And when I look at this chart, I just see a big bear flag. This is an impulse move lower. This is a correction. And we're about to get another impulse move lower. That does not match with TNX about to do this. That's not jiving with that. That's not how that works. So that's all I've got. If you have any questions, comments, if you like the video, like it, share it, retweet it, comment. Let me know what you think, and I'll see you next week. Hope you guys have a great day.